Dear clients, I'm Richard, Senior Phillip CFD dealer. US large cap equity benchmarks managed to end last week with fractional gains that took S&P 500 and Dow Jones 30 to new records. The Nasdaq 100 outperformed, lifted by strength in technology stocks, while the Russell 2000 delivered the most lackluster result. Now, with the bulk of the US Q3 earnings season already behind us, and taking into account the huge equity rally in recent weeks on the nice combination of earnings cheers and global policy stimulus boost, it should come as no surprise should market tread sideways as it search for new directional catalyst. Indeed, we noted here that the S&P 500's rally from October 15th has expanded its trading valuation to 17 times forward PE, underpinned by US Q3 earnings climbing 8.5%, and as 80% of the S&P components exceeded analyst estimates, according to Bloomberg data. Tagging along, global equity has also added more than $3 trillion to its value since October 15th. In terms of US economic calendar, last week was relatively thin. Nonetheless, investors were overall encouraged by healthier signs of US consumerism, the main engine of US economic activity. This was reflected in a rise in the University of Michigan's Index of Consumer Sentiment to the highest level in 7 years, better than expected October retail sales, and even an optimistic sales outlook by discount giant Walmart, which reported that its lower income clientele is benefiting from a falling gas price. On the other hand, the gloomier side of the global picture, such as the oil rout and other potential signs of demand weakness, which were pushed to the back burner, may return to weigh on market sentiments as market focus shifts away from earnings front. For instance, oil has collapsed into a bear market as leading members of the OPEC resist calls to cut production in their attempt to retain global market share, raising concern of a supply glut amid sluggish global demand. In addition, investors may get increasingly worried about the global economic deterioration and/or disinflation threat, particularly in the euro area as well as the BRICS economies, should economic data loses its momentum yet again. In other cross-market actions, gold reached a 5-year low on November 7th, somewhat reflecting a weak global inflation outlook. However, over the last 2 days, it staged the biggest rebound since June as oil price showed some strength ahead of the November 27 OPEC meeting, whereby OPEC members might potentially reach a consensus to curtail production. In the FX world, the yen also tumbled for a fourth week to reach a 7-year low versus the dollar as BOJ surprised markets with additional stimulus at last month's gathering, and on speculation that PM Shinzo Abe may call for early elections to consolidate his mandate for unprecedented stimulus to boost the economy and to delay a planned increase to a sales levy. This capitulation act by the Japanese policymakers suggests that they are judging their economic conditions as way too weak, and that deflation war is far from over, isn't it? This week, we'll have a heavier events calendar, which includes the Fed and the BOE, among other major central banks, releasing minutes of their latest policy decisions. Shortly thereafter, investors will also have to grapple with the global PMI flashes on November 20th. All said, I believe that the US equity market has celebrated the bulk of the recent batch of US economic optimism and earnings cheers. Therefore, in the meantime, equity participants may wish to consider profit-taking to capitalize on any potential US equity market upswing opportunities for the remaining autumn season. Clients may consider using Phillip CFD to trade equities and indexes across markets to capitalize on trading opportunities in both rising and falling markets. In addition, you may also trade based on different strategies using many more benchmarks, which are available with Phillip ETFs. With that, I've come to the end of the presentation. Thank you for watching this week's Market Watch. I'm Richard from Phillip CFD. Please subscribe to us on PhillipCapital YouTube channel and Facebook. Stay tuned for more Market Watch videos.